Fibonacci's. Fibonacci, fibs, the fibs. Today, we're going to show you guys a move in the market. I took a trade here on the ES, on the SPY, and I'm going to show you how I use the fibs to find the perfect area to buy the dip before the rip higher, and also to avoid one key thing. The Fibonacci retracement actually stopped me from getting short because I could see that there still was that Fibonacci level, the key level. We're going to show you guys that golden Fibonacci pocket right here in this video and how you can use it in your trading today. Let's go. What's going on, guys? Patrick here, and well, today we're talking about the Fibonacci's. I know it sounds like it's like a fun thing to say. I just keep saying it, but sorry. Let's focus here. Let's focus. So looking at the chart right here, you can see the market overall, selling down, down, down. We get this push back up. You can see we had the MACD cross. We get back above the EMAs. But the thing is, we pushed up to kind of that previous level of resistance. We've been getting like stuck there all day. If you look here at the SPY, same idea. We were stuck there at the 21 EMA. So I'm thinking to myself, like, well, maybe I want to get short. Maybe I want to get short there. Obviously, now in hindsight, I probably would have been okay with getting short. But in general, I'm looking at this like, if I look at this move up, okay, I want to get short, right? I want to get short there. I'm thinking this whole day we've been sell, sell, sell. So what am I going to do? Well, I'm not going to get short until I confirm. Let's, put the Fibonacci retracement lines on there. And then I'm going to click the low of this move, kind of down there at the bottom, and then the top of that move. Remember, basically imagine the market moved like this. So the market goes up, ding, 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 and then it pulls back, and I'm like, okay, it's pulling back. It's breaking below the EMAs. You can see, like, right there, that red candle. It got denied there at the 3,975, multiple times. A pretty big pullback in general, so a big pullback there on this move. And I'm thinking, like, well, it's time to get short because we're getting stuck, 74s. We can't push up, so I might as well get short, right? I'm not going to try to get long here, but once I put the Fibonacci retracement on there, I can see, if we go sideways here, I can see that this area here, this area of interest, this is basically the golden pocket, this area right here. And this area here is going to be the 0.618 retracement area or the 0.786 retracement area there. And as you can see, what do? That candle, look at this thing, still crashing right now, but this candle right here bounced perfectly off of this golden pocket, the Fibonacci golden pocket area there. Obviously, I'm lucky that I did not get short because, if I got short here, I see that we're bouncing off this golden pocket area. Well, I'm going to avoid, getting a loss and getting basically ripped my face off here. So normally if I'm looking at this move without the Fibonacci retracement lines on there, I'm thinking like, oh, well, it's a short, like, it's breaking below the EMAs. It's basically gave up that whole entire move there. It's looking weak. And as you can see, we had that big wick on the bottom of that candle, basically showing us that there was a reversal there. So first off, I'm not going to just get short right there because I know there's still that Fibonacci retracement area, the 0.6 and then the 0.7 down there. So these levels here, we got these fib levels. Do I want to be getting short knowing that there's the Fibonacci levels right there? Probably not, because I'd be worried what is going to happen, that there's a possible bounce back to the upside here. So that was very clear to see after we put the retracements on there and we focused on the idea that this wasn't a short, that if we could hold, we could hold that level, hold the 0.7. Oh my gosh, the market's literally getting murdered right now, but that's beside the point. A lot of stuff on this chart. But if we could hold, this level right here, right where that candle was at, there was a good chance that we would then start to push back up. So at that point, even though we're below the EMAs, even though we basically gave most of that move back there, we're still like, well, we got support there. We got that 0.78, we got that 0.618. So I'm not trying to get short. Like, I'm just not going to get short here because guess what? We got that reversal candle, and look where it reversed at, right there in that kind of golden pocket of the Fibonacci retracements. So that worked out almost to the, to a T in terms of kind of finding that area of support, that pullback there on that move. We had that huge move up. We pulled back. The thing is, seeing this move up here, am I going to FOMO into this move up or am I going to wait for the pullback? Well, I'm going to wait for the pullback either way. And again, I don't want to get short thinking that this is, oh, it's going to crack below the EMAs. It's going to start to sell, sell, sell. It ended up doing it once we kind of double top, but in general, you know, do I want to get short there? Probably not. Seeing that I put the fib retracement on there, I now am like, okay, I'm not going to get short until we like kind of break through this area. If we break through that area and then we start to show weakness, well, then I can get short. But I should be looking for a long because guess what? We got that reversal off of this key area. So I saved myself from losing money on a short, and I was able to profit from this going up. Now, what's interesting here is, you know, we bounced, and then guess what? We retested that high. And normally when we get these types of moves, these pullbacks, you know, the market basically moves in these legs, you know, moves up and pulls back. Idea is that you basically would have like this move here. See like that size of that move? So if I basically measure this move here, we get the pullback to the fibs. Where's the move to the upside? You know, the idea is that this would push up to the 90s, seeing that if we compare the move up, the first impulse wave, the first move up, well, the next wave, next leg higher, should be similar in size and similar in kind of velocity there. But obviously, we sold off massively, and I kind of missed out on that because I was making this video. But either way, here it is down to the 55s now. So very interesting move here today. I think this is basically just retail getting caught both ways. You had all the shorts piling into the downside. Then you had people piling into it trying to get long. And then bam, smacks back down. People get out. Oh, once again it goes. And then bam, it's really done. So very interesting to see how it all played out. But the key here for me is to focus that, you know, this was not a short, knowing that that fib area was there. That 0.786, 0.618, that golden area. And this applies to crypto, Forex, whatever you're trading, these levels. And you can see pretty clearly that pullback, ding, 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 into that pocket, and then the rip higher. Even though we got below the EMAs, you know, normally if I just took away the fib, you know, we're looking at it, it's like, oh, it's looking weak, it's going to sell. But once I put the retracement lines on there, I can see like, oh, okay, this is actually looking like it might want to bounce. So it's giving me a better perspective. Even though this is pulling back, it's getting below the EMAs, it's showing weakness, it's pulling back, you know, naturally pulling back to that area, that pocket. And that was kind of the key to making this move higher. And it saved me a lot of trouble and a lot of heartache because we were able to see that. So again, very simple. You know, this move is basically from the bottom to the top. I put my fib on there and I can see, okay, as long as we kind of hold in this area, there's no reason to get short until we break below that at that point. Really, you know, if I'm thinking like this is kind of what I'm looking at for a short, you know, maybe we push up here and then we pull back. Well, then like this move here to the downside, obviously that's a short. But this is a long. It's a long as long as it holds those levels, those magical Fibonacci levels there. I mean, you kind of put it there. I mean, you could pretty much like in the same vicinity. But you can see that candle actually closed above that 0.618. So that's a little lesson for today. Kind of saved me from getting short. Like I said, I would have gotten short here if I would have not drawn this Fibonacci retracement on there. I probably would have gotten squeezed out of it. And I'm sure a lot of people did the same thing because they see that big move up. They see the break below the EMAs and they're like, oh, time to short. But really, it's still long as it's holding kind of that golden pocket, that 0.618, that 0.786 there on the Fibonacci retracements. So there it is, Fibonacci retracements. Use it. If you're looking for opportunities, looking for a pullback, don't be afraid to put that Fibonacci retracement on there. And I think it'll help you out, kind of have a better idea. Even though, like I said, you know, even though it pulled back below everything that I thought was support, kind of was a really good pullback there. Really, really good pullbacks.
Yeah.